Welcome to the deep dive, where we sift through the noise, take your sources, and really pull out the crucial insights you need to be truly well informed.
Great to be here.
Today, we're plunging headfirst into a story that, frankly, sent shockwaves through the biopharma world. We're talking about the dramatic plummet of Viking Therapeutics stock.
Yeah, quite the drop.
Our mission for this deep dive is pretty clear. We need to unpack why Viking Therapeutics, ticker symbol VKTX, saw its stock dive by, over 42%? On Tuesday, August 19th, 2025.
That's right, a huge drop.
And this all happened right after they released data from a phase 2 clinical trial for their oral drug, VK2735. This drug is a dual agonist targeting the GLP-1 and GIP receptors, essentially designed to tackle metabolic disorders like obesity.
A very hot area right now.
Exactly. So what exactly happened here? And I guess what does this seismic event tell us about the future of obesity treatment and maybe the high-stakes biopharma investment landscape? Let's dive in.
Let's do it.
You likely saw the headlines. I mean, they screamed. Viking Therapeutics stock didn't just drop, it absolutely plummeted.
It really did.
We're talking a staggering 42.01% plunge in a single day. It went from $42.09 at market close on August 18th down to $25.99 at market open on August 19th. The reaction was just instant and brutal.
Yeah, the pre-market trading already showed a massive dip, around 37%, I think, so the writing was kind of on the wall before the opening bell.
But here's the twist that makes this so dramatic and honestly so confusing for a lot of people, myself included initially. Viking actually announced that their oral weight loss drug, VK2735, met its primary and secondary endpoints in the phase 2 venture oral dosing trial.
Right.
They even achieved statistically significant weight loss. So by all accounts, on paper, it worked.
Technically, yes.
And yet the stock crashed. What am I missing here? What gives?
That's precisely the paradox, isn't it? Because in biopharma, especially, clinical stage biopharma, working isn't always enough to satisfy the market. Investors in this sector, particularly when you're looking at smaller, earlier stage biotech companies like Viking, they're not just looking for statistical significance. They're looking for market-beating significance, best-in-class potential, and really flawless execution.
Okay.
So that immediate, sharp, negative reaction, even though the drug met its endpoints, it signals that expectations were just sky high. Something in the details clearly fell short of those lofty benchmarks.
Okay, sky-high expectations. We need to dig into those details then. But before we do, let's just make sure we're all on the same page about what VK2735 actually is.
Good idea.
We keep hearing about dual agonists for GLP-1 and GIP receptors. What are these, and why are they so important for a drug like this?
Right. So think of GLP-1 and GIP as your body's natural gut messengers. They're what we call incretin hormones.
Okay.
Your intestine releases them after you eat.
Yeah.
And they play a really vital role in regulating your metabolism. GIP, that's gastric inhibitory polypeptide, and GLP-1, glucagon-like peptide 1, they're both key players in stimulating insulin secretion.
Insulin, right.
Yeah, they work by binding to specific receptors, essentially flipping a switch that tells your pancreas, hey, release insulin now because there's glucose coming.
Got it.
But they also have distinct characteristics, which is why targeting both is interesting. GLP-1 is pretty well known for signaling to your brain that you're full satiety. It also slows down stomach emptying and suppresses glucagon, which is a hormone that raises blood sugar.
Okay.
GIP, on the other hand, also contributes to insulin release, but it has other roles too, like influencing how your body stores fat.
Okay. So hitting both.
Exactly. A dual agonist isn't just a bigger hammer, it's trying to be a more precise one. It mimics and amplifies the effects of both these natural hormones, trying to hit metabolic disorders like obesity from multiple angles.
Makes sense.
That comprehensive approach is why it's such a hot area in drug development right now.
So this agonist drug, VK2735, it's designed to mimic these hormones, amplifying their effects, giving your body a stronger signal to manage weight and blood sugar. And sources like the Cleveland Clinic highlight that even GLP-1 agonists alone do a lot. Trigger insulin, block glucagon, slow the stomach, increase fullness, which leads to weight loss.
Right.
So this dual agonist strategy, it's aiming to leverage the best of both GLP-1 and GIP.
That's the goal, yes.
Okay, now let's unpack those mixed results that seem to be at the heart of Viking's stock crash.
Let's get into it.
Viking initially stated VK2735 achieved up to 12.2% body weight reduction from baseline over 13 weeks of once-daily dosing.
Which in isolation sounds pretty decent for 13 weeks.
Yeah, and they said weight loss continued with no plateau and that the drug was safe and well tolerated, with 99% of GI side effects being mild or moderate.
Uh-huh.
On the surface, that sounds okay, maybe even good. So again, what gives? Why the crash?
Okay, this is where those extremely high market expectations really slam into the data.
Yeah.
While the drug did show significant weight loss, the crucial concerns for investors, as our sources really highlight, boil down to two main things: adverse events, AEs, side effects, and comparative efficacy. How does it stack up against the big boys?
The competition.
Exactly. Specifically, here's the rub. A significant number of patients, a staggering 38% in the highest dose group, the 120 milligram group that got that 12.2% weight loss.
38%.
Yes, 38% discontinued treatment because of tolerability concerns.
Wow.
Predominantly those gastrointestinal side effects, nausea, vomiting, diarrhea. Imagine, signing up for a weight loss drug, you're seeing results, but you feel so unwell you just can't stick with it.
That's a huge problem.
It's a massive red flag for investors thinking about long-term use and market adoption. Now, Viking CEO Brian Lilly, he tried to reassure everyone. He said these GI issues tended to happen early and resolve fairly rapidly with continued dosing.
But the market wasn't buying it.
And apparently not. The market clearly fixated on that overall dropout rate, which was 28% across the entire trial due to side effects, not just the high-dose group. Still very high.
28% overall dropping out due to side effects. I mean, that seems like a monumental hurdle, doesn't it? Especially for a drug you need to take consistently for weight management, not just a 13-week sprint.
Absolutely. It screams potential compliance issues down the line.
What really stands out to you about that 28% figure?
It immediately makes you think about the competition.
Yeah.
And that leads us right into the next big issue: the competitive landscape.
Right, because this isn't happening in a vacuum.
Not at all. Vikings is entering a very hot, very crowded, and very competitive market. It's already dominated by some real giants.
Like Novo Nordisk and Eli Lilly?
Exactly. So that 12.2% weight loss Viking reported, while significant on its own, it just looked a bit underwhelming compared to rival offerings, or at least what the market perceives from rival offerings.
How so?
Well, for instance, Novo Nordisk's oral Wegovy, which uses semaglutide, has shown 13.6% weight loss, though that was after a much longer trial period, 64 weeks.
Okay, longer trial, slightly more weight loss.
And Eli Lilly's oral candidate, orforglipron, also has pretty strong phase 3 data backing it, suggesting potentially higher efficacy as well.
So the comparison game is tough.
It's brutal. And then you have the injectables, right? Zooming out, the injectable GLP-1 receptor agonist treatments, like Novo's injectable Wegovy and Lilly's Zepbound, they currently offer superior weight loss efficacy, often significantly higher percentages over longer periods.
But people prefer pills, right? Isn't that the angle?
That's the potential edge, yes. As one analyst thoughtfully points out, the oral pill format offers other benefits. Think about it. Patient-centric administration, much easier than injections for many people.
Yeah.
Easier storage, potentially lower manufacturing costs down the line. These factors could attract a different segment of patients, particularly those who are just resistant to or uncomfortable with injectable treatments.
So, okay, despite the competition and maybe slightly lower efficacy numbers compared to some, there's still a glimmer of promise. Mainly because no one has actually launched an oral GLP-1 GIP drug for obesity yet.
That's the potential opening. And actually, one analyst suggests that setbacks for competitors like Eli Lilly had some reported issues with orforglipron regarding adverse events, maybe different tolerability challenges.
Ah, so they have issues too.
Potentially, yes. Things like liver enzyme elevations or different GI profiles have been watched closely in competitor trials. These kinds of issues could actually create a clinical void, as the analyst put it, for smaller competitors like Viking to fill.
Interesting. So it hints at a potential opportunity even with these mixed results from Viking. The race isn't necessarily over.
It suggests the door isn't completely shut, but the path forward is definitely challenging, especially regarding tolerability.
Okay, this single stark plunge for Viking, it isn't just an isolated incident, is it? It feels like it reflects much broader trends in biopharma investment and this huge obesity treatment market.
Absolutely. What's fascinating here is, while the headlines screamed about Viking's crash, the underlying biopharma investment scene actually saw a pretty strong year for venture capital in 2024.
Really?
Yeah, it surpassed 2023 with something like $26 billion poured into the sector. But, and this is a big, but M&A activity, the big company buyouts, actually declined in Q4 2024, hit its lowest levels since early 2022.
So VCs are investing, but big pharma is maybe more cautious about buying.
It suggests investors are active, they're putting money in, but maybe they're being pickier than ever, focusing on larger but fewer investments perhaps.
Makes sense.
And this caution seems particularly evident in their focus on clinical stage companies' phase 1, 2, or 3 trials. These saw significantly higher median investment amounts in 2024.
At how much higher?
Well, for example, phase 3 companies reported median venture rounds of $98 million. That's more than double what they saw in 2023.
Wow, okay.
So this increased concentration on later stage assets means there's just a lot of money riding on successful outcomes at these pivotal points, which helps explain why the market is so incredibly sensitive to mid-stage trial results, like Viking's phase 2. The stakes are just incredibly high. Any wobble gets magnified.
And looking at the obesity treatment market itself, I mean, it's not just growing, it's projected to absolutely explode.
Oh yeah, the numbers are staggering.
Valued at roughly $16 billion in 2024, projected to hit over $60 billion by 2030. That's a compound annual growth rate of over 22%.
Exactly. That kind of meteoric rise explains why so much money and so many companies like Viking are rushing into this space.
And GLP-1 receptor agonists like Viking's drug, they already dominate this market, right?
Yeah.
Over 80% of the revenue share in 2024.
You do. This massive market growth is undeniably fueled by the rising global prevalence of obesity and all the associated health problems, diabetes, cardiovascular disease, you name it.
Plus more awareness, government initiatives.
Right. And North America is currently the powerhouse, holding a huge chunk, like 73% of the revenue share in 2024. So despite Viking's individual stock drop today, the underlying market for these treatments is not just booming, it's actively seeking effective and convenient solutions.
And that demand fuels deals too, I imagine.
For sure. The intense interest in GLP-1 and GIP therapies has propelled significant deal-making. There were 8 such deals worth $8 billion just in 2024 year-to-date alone. That signals a real long-term commitment from the broader industry. They believe in this class of drugs.
Okay, so let's try and tie this all together.
Yeah.
What does this mean for Viking Therapeutics and more broadly for you as someone trying to understand this incredibly complex market?
Yeah.
We've seen this sharp stock drop, trial results that were technically a success but perceived as mixed because of side effects and maybe efficacy comparisons, and yet a booming competitive market that's desperate for solutions, especially oral ones. It feels like a genuine paradox.
It really does. And if we put this into the context of how stock prices typically react to clinical trial outcomes, some studies show something interesting.
Oh, yeah?
The classification of a company, whether it's seen as early biotechnology versus big pharmaceutical, seems to have the most significant impact on stock movement.
So size matters for volatility.
It seems so. Smaller, earlier stage biotech companies like Viking, they tend to experience much greater stock price swings up or down when trial results are announced, compared to their larger, more diversified counterparts.
Right, because one drug failing or succeeding is a much bigger deal for them.
Exactly. It helps explain the sheer severity of Viking's crash, even with results that, in isolation, might just be seen as good rather than great or best in class. They're simply held to a much higher, maybe even unforgiving standard by a volatile market focused on that huge potential upside.
And are there other signals we can look at, like insider trading or hedge funds?
Yeah, and those signals are also pretty mixed for Viking, which just highlights the uncertainty. On one hand, Viking's president and CEO, COO, and CFO all sold shares in the past 6 months.
Which usually isn't seen as a great sign.
Generally, no. It can signal a lack of internal confidence, though there can be many reasons for selling. But interestingly, there was one notable purchase by an individual director, Sarah Catherine Rowan.
Okay, so a bit of both. What about bigger investors?
Hedge funds also seem divided. Some big names, like Belliesny Asset Management and FMR LLC, they removed large positions recently. But others, like Two Sigma Investments, actually added significant shares.
Huh. So even the big money is placing different bets.
It seems that way. And then you look at Wall Street analysts. They still had 5 buy or overweight ratings with 0 sell ratings in recent months. Their median price target was $102.
$102 compared to the, what, $26 it hit?
Exactly. Massively higher than the current price after the drop. So it really raises that crucial question. Who's right? Is it the immediate, almost gut reaction of the market? Or the longer-term analyst view that might be factoring in the unmet need for oral options, even if this one isn't perfect yet?
It really highlights the sheer volatility and just the differing investment theses at play, doesn't it?
Absolutely. High stakes, high reward biopharma, investing in a nutshell.
Especially in a field like obesity right now. The convenience of an oral pill is clearly a massive draw for patients. But just as clearly, tolerability, that dropout rate, and how you stack up against existing powerhouses, those remain critical hurdles for widespread adoption and, crucially, for investor confidence.
That seems to be the takeaway message from this event.
So, okay, Viking Therapeutics stock plummeted today, not because their obesity drug VK2735 failed outright, technically.
It met endpoints.
It plunged because its performance, and particularly its tolerability profile in phase 2, while meeting those endpoints, just didn't quite meet the sky-high expectations set by its incredibly effective competitors in what is undeniably a booming but brutally competitive market.
Well summarized, the context is everything here.
It's just a powerful reminder, I think, that in the unforgiving world of biopharma, good enough isn't always good enough. Not when billions of dollars and ultimately millions of lives are potentially at stake.
True. The bar is set incredibly high, especially in blockbuster indications like obesity.
So here's a final provocative thought for you, our listener, to mull over. In this market, where injectable GLP-1 GIP agonists are proving astonishingly effective, hitting really high weight loss numbers.
Yeah, the injectables are very effective.
And these new oral options are only just emerging, with maybe some trade-offs. How much will patient preference for sheer convenience, taking a pill versus a shot, how much will that actually outweigh slight differences in efficacy or maybe tolerability issues when it comes to capturing market share and investor confidence in the long run?
That's the billion-dollar question, isn't it?
Will that good enough, maybe more convenient oral pill find its significant niche? Or will only the absolute best in every single metric, efficacy, tolerability, the works, truly survive this high-stakes race? Something to think about.